It's back to the day trading tool shed. Today we're going to analyze some charts, take a look at some indicators. I went back and looked at a lot of the trades that I made this past week, and what was very interesting was a lot of those trades that I got stopped out on, the market ended up moving in that exact direction that I had planned. So it wasn't that I was wrong with my idea of the market going higher from where I bought at. The problem was just timing my entries to a point that I was able to handle the drawdown for that move higher. The problem is if you're buying too high on a move up and then the market pulls back, you get stopped out for a loss, and then the market starts to move back in that direction. You're basically just paying commissions, getting stopped out for no reason, and well, it's a problem, right? It'll affect your overall P&L, and it also affects your overall emotional demeanor when you're day trading. We're going to talk about that right here in this video, so make sure you stay tuned. The big problem that I noticed was my entries. You can see like this move here. We have this push up, we pull back, we have another push up. So normally, like with my trading style, I would buy when we break above this high there at the 190s. You can see we got a push up there to 196, so about a 6-handle move. But guess what? The market then pulled back. So if I'm buying here at 191, 192 area, the market pulls back to 182. I'm getting stopped out, right? Like I got stopped out at that point. What I need to do to change that is focus on a couple of different things. Pulling up the trading view chart here, you can see right now we got the VWAP at that level. We got the EMAs. This is the 9 EMA and the 20 EMA. The 20 EMA is going to be this brighter yellow. The orange line is going to be the 9 EMA. Now, make sure you focus on that because it's going to be important to understand here. If I'm looking for this breakout, we get this breakout there, and I'm thinking, okay, we're going to push higher. What do I normally do? I end up buying here, right? This is my normal area to buy. I ended up buying, right? Like that's my old way of buying, or normally how I buy when we get this push up above that level. But guess what? The market then moved down after I bought there, and I would have gotten stopped out because if I bought there at 192 and it goes to 182, I'm getting stopped out. We pull back from that level, we're bouncing off the 20 a lot. But the thing is, you can see how the market pushes up and then pulls back to that 20 again before making a meaningful move higher. Now, obviously, there's always a chance that this market could have went like that and pushed up from that level. You know, there's always that chance. When we get that move up, look at, we're already off of the EMA, right? We're already off the EMA there. How do I make my entries better? I need to be buying when we're pushing off of that EMA, not when we're already pushed off of it. Because we pushed off of the EMA and then we pulled back to the EMA and then finally we get that big move up. There's always a chance, yes, the market could have moved higher from there. But again, you know, we're trying to focus on getting better risk to rewards. So what is a better risk to reward on this move? The better risk to reward is me buying down here. Now, you might say, well, how do you know to buy down here? The big thing, like I said, is instead of buying here at the top, I want to be buying for these breakouts to the upside. Because guess what? We pulled back. We bounced off that 20 EMA. Even if we get rid of the EMAs, that's the cool thing about this. Let's get rid of these EMAs. You can see, hey, if you guys enjoy these videos, do me one big favor, hit that like button and the subscribe button. Let me know in the comments below, what do you guys want to see me talk about next? What would be a good idea for a video? Let's get back into the action. We just moved from this low to that high there. We pushed through that level. But guess what? Again, if I'm buying here, what am I doing? I'm buying as we've pushed up already off of kind of that wave. So this is the bottom of the wave right here, bottom of the wave there. That's like an entry area. This is a top of the wave. Even if that market moves up, let's say it moves up there, there's still going to be a top on that wave and then it's going to pull back. I can pretty much like guarantee that. Like you're going to get this move up and then you're going to get top of the wave, it's going to pull back. So all I need to do is instead of buying this breakout here, I need to be buying the bottom of these waves. The move out of that wave. So if the market's moving like this and like this and like that, you know, we're getting those higher lows. Where do I want to be buying? Not here. I want to be buying here. I've talked about this whole idea before of basically looking at these lines. So we're buying always when we get a break to the upside out of a move, out of a little small trend pullback. We're never buying at the top here. Again, another one right here to see. We push up this level. You know, if I buy right here thinking we're going to push higher, well, guess what? I get stopped out. If I buy right here, what's my risk? As we push above this last candle, my risk is the bottom of these candles. So my risk is going to be much smaller on this because, again, let's say I enter here for my entry. Like, where's my risk at? I mean, really, my risk is like down here. You know, you're risking from 75 to 52, where here I'm only risking from like the 60s to like 58. You know, I'm risking 3 or 4 handles there compared to risking, you know, 20 handles here. So, keeping that in mind, you know, I really want to focus on making sure that I'm not, again, you know, if the market's moving like it's moving like this, look at the bigger picture. What's the market always do? The market goes right, making those waves. So if we look here at the chart, where do I want to be buying? I do not want to be buying there. I want to be buying at the bottom of these waves. Again, don't want to be buying there. I want to be buying at the bottom of these waves. So now let's put the EMAs back on the chart. And one thing that I saw pretty like obvious here is if you look at the chart with the EMAs, guess what? Every meaningful move that we had in the market on Friday, every meaningful move started at the 20 EMA. It never started when we were already off of the EMA, like when we're massively off the EMA. You can see how like from here to here, look how far we are off that EMA in that area, right? And this was, I probably try to buy the breakout here, to be honest. Like, probably try to buy there. We have already the markets pushed off the EMA, the 20 EMA. It pushed off it earlier. But you can see how there's all that distance between the price action and the 20 EMA there. So why would I believe that there's going to be another leg higher? We've already been off the 20 EMA there. You know, we're having trouble pushing through. So there's no reason for me to enter. Again, I want to make it clear that yes, you know, the market could push higher from here. It can always do that. But do I want my entry to be there? Like, do I want to be in that move, or is that just FOMO? Is that me chasing the move, right? Like, I'm chasing the move higher. Because again, you know, in hindsight, obviously we pulled back here. So I'm basically trying to get in at the top of this move. At the top of it, like I said, you could have pushed higher, yes. You know, it could have been another high up here in this level. But you got to think, that was only what? From here to here, 20, 30 handles, 40 handles. But again, where's my risk at? If I'm buying there at the 301s, what's my risk? I mean, we're risking 20 handles, 30 handles for this move. We got the EMAs there, we're thinking. So the risk to reward is just terrible trying to buy these breakouts at the top of these waves. Like, just terrible reward. Like, obviously, like, we're looking in hindsight right now, right? So it's always a little different when you're looking in hindsight. It's easier to see the setups, obviously. So I want to make it kind of fair in the sense of like, okay, we get the pull back to the 20 EMA. You can see right there, we bounce off the 20 EMA. We push up again. Where would be my entry here on this trade? If I wanted to enter here, where's my entry? Let's see where the VWAP was at this time. The VWAP's still up here. Okay, so we know that there's room to push up to the VWAP. So here on this, obviously we pull back, and I want to be entering when we break above that last 1 minute candle off of that reversal area. It's kind of did it like right here, but again, you know, you could have risked, you got the 72s. It's a little bit a risk there, but let's kind of get, I think this is also like right out of open as well, not a clear trend. You're risking off the bottom of this candle there, off that bottom there. So you could have entered here, sure. But let's say you entered at a better area and you entered at here off of that 20 when we got that close above the 20. Because the thing is, when we're down here, we're not getting like a good close above that 20 when that pushes up. So here is a much better opportunity because we close here on this 1 minute candle. We close right there at the 20 and the 9 EMA. And then we start to push up. So we look at it like this. We get that break above this 1 minute candle. We push up here. And remember, that 20 EMA is right there. So we're saying we're going to enter here. Again, we didn't want to enter up here, obviously at the top. And then what's funny, we pushed up above this previous resistance area, so I would have probably gotten long here. We did kind of end up pushing up, but this was the much better entry, right, off of that 20 EMA. So that 20 EMA there pushes off the 170s, and look at this thing go all the way up there to 300 before ever touching that 20 EMA again. So if I'm entering at the 160 level here, if I'm entering here, I can ride this all the way. We push above the VWAP, beautiful. We're holding the VWAP now. We're at the 9 EMA. We push up all the way to that 300 level. I can basically ride this trade all the way up there as long as we don't touch that 20 EMA again. Not to say that I probably would have taken profit earlier, but just to give you an idea of what the risk to reward is. The reward is much better, buying here off these bottoms than buying out the tops. And then for a short opportunity, same idea. When we cross back below the 20 EMA here, we pulled back to the 20 EMA, we break below it, we cross the EMAs there, the 9 EMA and the 20 EMA crosses. We had a MACD cross as well up here at the 302s. So at that point, once we break below the 20 EMA, I can enter short right there and look at this thing go. I mean, we never had a candle close kind of like back above that 20 EMA. And to be honest, if I think about this, like I probably wouldn't have entered short until we broke below the VWAP there. So we break below the VWAP right here. We're still below the 20. We're getting stuck at the 20 there. We can short and we can ride this all the way down because guess what? We never touch the 20 until we get all the way down here. We went from 225 all the way down there to the 80s. So a huge move down. Lots of reward there. The risk being small. And again, that 20 EMA and the idea of what? Not entering at the top, but entering at the bottom here. Same idea for shorting, obviously. Like, I don't want to be shorting here at the bottom, right? Like, I don't want to be shorting down here at the bottom. I want to be shorting up here at the top of that wave as we move down. So the market pulls back. It starts trending up here. And guess what? We push up to that 20 EMA, we get stuck. We push up the 20 EMA, we get stuck. And then we get the reversal. We're starting to now get above the 20 EMA. And I think I probably entered a trade. I would say I probably entered a trade right here. Look at this. This is like textbook Patrick enter trade. We have this resistance there at that level. And guess what? If I'm trying to get long, I'm trying to get long right there. You can see we went from the like 30s or like the 40s up to the 45. So not much of a move, not much upside. If I'm entering at the top of that wave again. Remember, we're going all right, top of that wave. Bad, bad, bad. Don't want to do that. So where's my entry here? My entry, once we push above that resistance, we're back above the 20, is once we start to push back up off that bottom. So I'm entering here. We get to push up to the 60s. That's 40 handles. That's all day money, money, money. Again, we push up, but guess what? We get off of the 20 EMA. You can see that area that we're off of that 20 EMA there. Like we have that space between the 20 EMA and the price action once again. We then pull back 20 EMA. We're kind of bouncing. Market's recovering. We're trending higher. We're following this trend up. We're bouncing off the 20 EMA. We then break below the 20 EMA for a second there. We pull back and we start to then go higher. But again, check this out. That 20 EMA, man, it's so interesting because we cross here 20 EMA. We then ride from the 140s up to 240. So a 100 handle move. We never broke below the 20 EMA until we got up here. We didn't even touch it. So number one, I wouldn't want to be buying right here. Look at that. This is a good example. I wouldn't want to be buying here. We're at the VWAP. We're getting stuck at the VWAP, but again, we're off of that 20 EMA. We're just off of it. So why would I want to be buying there? But guess what? We get the pullback to that 20 EMA. We pull back. We touch the 20 EMA there. We have this idea of buying at the bottom again. And then look how beautiful this move is. From the 180s up to 240, boom, another nice move to the upside. And again, look at this. Look at how we're not close to that 20 EMA. So I don't want to be buy, no buy, no buy. Okay, we pull back 20 EMA. Possibly I can get long here, kind of chopping around there. Really you want to make sure the market's trending. You want to make sure there's momentum there. And this is also in the middle of the day. So the market then pulls back. This is the end of day move to the upside, back above the VWAP here. Great way to look at it. This is like textbook. This should always kind of just be in your idea book. Again, we talked about this already, but look at that. We pushed above that resistance. Normally, I would enter here, right? Like I would enter when we break above this resistance, thinking we're going to push above the VWAP. But instead, look at how we're not close to the 20 EMA. We're not close to it. So why would I enter? Not a good idea, Patrick. Don't do it. And, well, we pull back 20 EMA. I can enter in this area here for that move higher once we get that push. And there it is, from the 180s up to 230s. Good little reward once again. You know, what's my risk here? I think the risk is pretty clear. We're basically just risking off of that level right there. So we're buying at 85s. We're only risking off the 80s. And if you look here at a bigger time frame on the 3-minute chart, same idea. No move, no meaningful move happened on the market on Friday. Not one meaningful move happened until we interacted with that 20 EMA. So we move down, we push back up, we have to touch that 20 EMA, and then, you know, we go from here to here. But again, look at how far we are off of that EMA there. We're far off of that 20 EMA. We then pull back to the 20 EMA. We break below the 20 EMA. We sell off. So meaningful move, meaning, you know, the move started here. It pushes up. Boom. That's a meaningful move from the 180s up there to the 311s. And then all the way down, we sell off. We're below that 20 EMA this whole time. We then want to move higher. Guess what? We got to get back above that 20 EMA. And that's exactly what the market did. Again, you know, pushing up. You can see we're far off of that 20 EMA here on this leg up. We had to pull back. We're kind of bouncing, 20 EMA. And then we finally get that support. And we make that move higher. That's that meaningful move, you know, off of that 20 EMA. And again, like, do I want to be buying up here? You know, from the 218s to the 240s, there's a little bit of profit there. But again, look, we're just off of that 20 EMA. So the whole thing with the 20 EMA here is that it's basically just forcing me to be like, hey, look, you know, I don't want to be getting long up here. I don't want to be buying here. Like, this is not where I want to be buying. Like, I just don't want to be buying there because we've already kind of interacted with that 20 EMA. We made the move up. This is the leg up. We're pushing up now. And guess what? There's a good chance that we pull back to that 20 EMA before going higher. So all I got to do is just be patient and wait for that 20 EMA to give me my entries. And again, you know, I'm minimizing my risk. I'm maximizing my reward. I'm stopping myself from just entering trades nonstop, all willy-nilly. And I'm also just, you know, fine-tuning my overall strategy here. And I think, you know, we've proven, like I said, that I understand the idea of the market moving higher, moving lower based on overall fundamentals and based on the chart. You know, I could pick out kind of where I think the market's going to go, but the focus here is fine-tuning my entries. I need to fine-tune my entries to the point that I'm entering at a safer area in terms of being able to manage any bit of drawdown. Like, I'm never going to be able to enter like perfectly, like every time, like, oh, that's a perfect entry. But if I do enter, I want to be able to like hold and understand that, like, hey, look, you know, we're at a support, we're at an EMA, we've just pushed up, we're pulling back a little bit. I want to be able to minimize my risk and maximize my profits. So there it is, minimizing my risk, maximizing my profits. At the end of the day, what we saw by looking at the chart was no meaningful move happened until it interacted with that 20 EMA. Once the move already started, like, I should already be in that move higher, right? Like, I shouldn't be chasing the move up when I see that we're already off of the EMA. We're already off that 20 EMA. Yes, I might miss out on a few points here and there, but being able to be patient and wait for that interaction with that 20 EMA is then going to force me to have to be patient. I'm going to be able to avoid a lot of fake outs because I'm not trying to just buy those breakouts when we're far off of that 20 EMA. I'm looking to buy as we break the trend to the upside. So instead of buying at the top, I want to be buying as we're breaking off the bottom because it's minimizing my risk and maximizing my reward. Because even if the market doesn't push to a new high, at least at that point, you know, I'm going from the bottom back up to that previous high area, so I already can move my stop into the green instead of me buying when I get that breakout to the upside. I'm buying right there, and then all of a sudden the market drops back down, and I end up getting stopped out, and then bam, the market goes higher. So it's a very simple idea. Instead of buying those breakout tops, I want to be buying the breakout bottoms, if that makes sense, to get long. So there it is, just a little food for thought. Buying low, selling high, simple idea, we all know, but we got to really focus on our entries this upcoming week. I think there's a lot of potential to make money. There's a lot of potential to make a lot of money, but again, it's focusing on the entries and also focusing on minimizing the risk. So if you guys haven't already hit that subscribe button, you know what to do. Also, let me know in the comments below, what should I talk about next? I'll talk to you guys later on.
Yeah.